Thanks for checking out this video from NetPicks, and I'll be honest with you, today is a really important topic. They all are, but this one's really important, and we're going to talk about turning points. And the reason I'm going to talk about them, otherwise known as support and resistance, is because you don't need an indicator to see them, right? Every single person who looks at a chart can see a turning point. So it's really important that you know how to deal with them when price reaches these levels, or zones is a better word. And before I move on, let's talk about this price pattern guide. It's probably the most popular guide I've ever put together. You can download it for free. The link is above or below in the description. So let's talk about support and resistance price levels or price zones. And it's a common approach, right, to trading. Now, whether it's a viable strategy or not, that's another question. And a lot of that's going to depend on the trader. Now, one of the biggest issues with support and resistance is defining the price levels that mean something. So if you're brand new, let's just talk quickly. What are support levels? That's just an area where price is expected to stop going down and then start going back up again. Resistant levels, that's where price is expected to stop going up and we look forward to start heading back down. Now, these levels, they're estimates, they're zones, right? It's not an exact price point. So keep that in mind. And one thing you should know about, if you're already using support and resistance, how do you know they're better than any random line on the chart? Here's a test. I want you to turn off all the bars on your screen or your candles. I want you to put up some horizontal lines, and then I want you to turn the bars back on. You're going to see that price has miraculously bounced from some of the lines you've drawn, maybe even a couple of times. And what you might also see is that a market does not just instantly bounce from any level, right? Doesn't have to. And a market can break a level only to turn around and keep going back in the other direction. So these levels are just a reference point for subsequent activity. And this has to be at the forefront of your mind when you're looking for clues when looking to take a next trade. Now, I'm not going to go into great detail about how to identify your levels, but safe to say if you use structure of price, as you see here, it's a pretty good start. Don't overcomplicate it. Let's talk about rotation. A rotation is just a definable leg within the market movement, right? Just swings. We'll use that word, swings. And it doesn't have to be a big directional swing, right? Think of it in terms of breathing. Just like us, right? The market breathes in, breathes out. So in a bigger directional move, there are still counter rotations to that move. All right. So the key point, I don't want to belabor it. It's just, it's always happening, right? The up down movement's always happening. And when you can identify the size of the last swing, you actually get a better feel for whether there's enough energy, right, to go in the opposite direction. Okay. At least by what's enough that you would look at and say, hey, yeah, that's a small rotation, as you can see on this chart. There are different sizes. So I'd be remiss in not talking about pullbacks because this is my way of trading pullbacks. This concept of rotation, it's really important when you think of trading pullbacks. When the market has that big move up, we don't want to see the rotation against that move to be strong, right? We don't want to see a lot of momentum in that. Because if there's too much momentum going against that impulse move, oftentimes, you're going to see a breakdown of that trend move. Okay, and that's a good rule to have when you're choosing pullbacks to trade. The instrument that you're trading, that matters because the size and the distribution of rotations is going to depend on what you are trading. So when you understand the rhythm of the instrument you're trading, the rotations, that can help you get in sync with the market flow. So you're just not entering a trade just when the market's tipping its hand that a pause is coming. Now, price is not always going to just bounce, right? There's three paths that price can take. So now that we have some basics about the rotations, right? Market moves out, market moves down. Let's look at the way the market can react. Price can just bounce, a tick or two just before the level. And some would call this a strong level. Now, like in all cases, we talked about this, a market can bounce with a rotation of sufficient size, or it can be small. But before that happens, it's going to look something like this, right? It's going to look like a small movement. Because from here, the market can continue up and have a reasonable bounce, or it can just start moving lower. and at the same time, just be moving back and forth in a range. That makes trading pretty difficult. So at this point here, it's a little premature to make assumptions based on the information the market's giving you, what price is going to do, right? Too much can happen. But once the market has had a full rotation, the chances of pulling back to the level and then at least attempting a secondary push in the same direction are much higher. Price can slice through the level as if it's not even there. Again, for a greater chance of the break to at least have a secondary push after pulling back around the level, the simple requirement is that the break is by a number of ticks that by studying the market, you already know that, right? So if the market does break a level or a zone, that's pretty common. That's what the market does. Price can break the level and just bounce back in the original direction. So the textbook version that we've all heard about trading support and resistance, not accurate, because it's common for price to slice through the area without invalidating the level of interest, right? Called splash. If you think about the traders who play the small bounce, where do you place your stop loss? Right below the swing low when you're going long. Since the market seeks order flow, it's going to take out those stops and then continue on in the intended direction upwards. So when you do set your stop, make sure you allow for some degree of splash around your order. I like using ATRs for stops. There's a video linked above, and you can check that video out. Now, there's a lot of different combinations the markets can make up at these levels, but we're not expecting certainty, right? Because there is no certainty in the market, except that we are going to take some losses. We're just looking at probabilities. And timing matters, right? So a market can look like it's already reacted to a level in a certain way. So it might look like it's bounced, only to run through the level on a retest. It might look like it broke, but it's just trapping sellers, right? If we're looking at long trades overall. So the key thing here is get your timing right. And to do this, you actually leverage your understanding of what rotations are in the market. So if a market bounces from or breaks through a level by a decent number of ticks, what it's telling you is that it had enough energy on that side to gain that reaction, right? So at least an additional secondary test in that direction is likely after any pullback. It might continue to reverse or just keep on going lower. In fact, it might never give you a decent pullback at all once you spotted how it's just behaving at this level. But until you see how the market's reacting, it's difficult to judge the nature of other traders and what they're going to do at these levels. So there's two steps really to trade these price levels: identify them and consider what could happen. Identifying them is not enough, right? You need to consider how the market may react when it gets to these levels. You must accept that price may not break support or may not break above resistance, right? Either bouncing after pulling back from a level just by a handful of ticks, making a big move on a breakout just because the price is traded through by a tick or two. It happens. When you understand rotations and the market energy, it's just another part of unlocking the power of these levels. If you get it right, you'll potentially improve your timing of trades significantly. Thanks for watching. Any questions, comments, put them below.